Okay, well, let's move on. It has been a good quarter for Bank of Baroda. An improvement in their gross NPAs has been led by the highest ever write-offs by the bank in any quarter. P.S. Jaikumar, the MD and CEO of Bank of Baroda, joins in now to talk about that. Mr. Jaikumar, good morning. Congratulations on a good quarter this time around. I wanted to start by asking you about the loan growth because, you know, the domestic loan growth has been very healthy at 20% plus. What do you see as the trends for the next few quarters?
I think we would be planning to work within a 15 to 20% level of growth in the domestic credit. This of course is subject to the macroeconomic etc. But I am fairly reasonably comfortable that kind of number is achievable. Okay. And this is the 5th consecutive quarter we have been in the 15 to 20% level, so it's not a last quarter event. And I think we can continue to, given the fact that we made the kind of investment in distribution, product, process, technology, etc. I think we can continue to leverage on those investments and the incremental investments we are doing, and thereby keep the momentum on growth. That's really the current thought process, and I think it's achievable.
Okay, Mr. Jaikumar, good morning. Once again, congratulations. The numbers have elicited a further 3% gain in your stock. You already went into the earnings yesterday with a 3% uptick on the stock. But anyway, that's ephemeral. I wanted to know what is permanent. Is this margin sustainable or improvable? Very good set of margins, 2.67. We haven't seen that in what, 17, 18 quarters.
I would think they should improve, and the reason I say this is for the following: that 30% of the book is an international book, and that is continuing to see an uptake as we replace low earning assets with a better quality customer assets. And on the domestic side, as we continue to increase the provision coverage ratio, the net NPA numbers keep falling, then the dilutory effect of the non-earning asset comes off. I think that should happen on its own. But the other aspect of it is that we are also focused not so much, when we transacting with customers, is also getting a lot more focused on being able to do a whole lot of cross-sell, particularly inside getting float income. And hopefully as these things play out, we should see a continued improvement in the net interest margin.
Okay, so in that case, please tell us how much your current and savings account went up by. And because your overall deposits are up only 6.5% year on year, so I wanted to know how much are the current and savings account.
But if you look at the current,
yeah, please.
The current account, savings account, yeah, the current account, savings account continue to increase by about 10%.
Okay.
So the deposit part of it is, we can always grow. Deposit is also tied with the overall balance sheet position. One of the aspects that has been happening for us is our foreign currency balances have been increasing because of the runoff of the, the financing on the LOU based credit. So there is an overall liquidity, comfortable overall in respect of liquidity.
Okay. And credit cost, just that one, credit cost, that is the one that's jumped, which has increased your cost to income. That's the one that's spoiling the margins. So will you be able to bring it below 3.05 where it stands?
No, I think if you look at this quarter, if you looked at last quarter, the credit costs were quite comfortable. I mean, not comfortable, it was among the better numbers that we had, about 1.32%. This quarter, part of the increase in the credit cost is also because of some additional provisions we have taken over and above what is required under the IRAC norm as a method of being conservative. Okay. That's almost close to 1,000 crores. So once you net it off, then we're beginning to see the continuation of a low credit loss to asset numbers. But we had to take this additional provision because we thought that's the right thing to do.
Okay, so the impending merger is the next thing that's on everyone's mind. On account of the merger coming into effect, is there a risk of the NPAs rising in the quarters to come? Maybe the gross NPAs going above that 11% mark that you're currently sitting on?
See, I think this gross NPA is something we should place less emphasis on, place more emphasis on the net NPA number. And our focus is to reduce the real risk, which is represented by absolute net NPA number as it relates to capital. So I think we should really focus as to whether net NPA numbers would change consequent to amalgamation. Now, I think there are the position is that we started working on this amalgamation, all the three banks, and at multiple levels. We're trying to get together some convergence on product, processes, etc., making some progress with respect to technology. But it's still very early days as yet. The plan is around the first week of April, we'll be able to share a much more comprehensive presentation with the press and media and the analyst, and thereby show how the new strategy could effectively result in the sum of the parts, the amalgamated entity having greater value than the sum of the parts. But the work it's a work in progress. Once it's completed, we should discuss it.
Okay, so you mean you haven't looked at the subsidiaries' books, the other banks' books at all? Can you give any comfort? I mean, all the brokerage reports you read will ask are only asking the same question: post-merger slippages.
So let's put it this way, that over the last 1 year, as a consequence of the Reserve Bank of India's involvement, the passage of time, the issues are all well known in terms of what the NPAs are. And so I think we should have less surprises with respect to a difference between the projected, the stated book and the real book. However, there are differences in accounting policy as they stand between Bank of Baroda and the other institution, and there has to be convergence with respect to the accounting policy. We are working through these numbers, and that's where really it is. So if you ask me, do I know the numbers? I do. But to level of granularity, obviously not, because there is still Chinese wall in terms of sharing information, and so we're working on it. And I would say to you that, I mean, I would rather wait, I would rather come back and share the information with you. There are differences in accounting policies, whether it's depreciation, whether it's provision losses, coverage ratios. So I think we need to do some harmonization around this. And the general rule has always been, you take the conservative of any three of the various accounting rules. So there would be some provisions as a result of it. But there is also a commitment for additional capital, particularly with the Dena Bank component of the balance sheet. So net, I'm hoping we would come out okay.
Okay, so just one final question from my end. In all the spaces that you operate in, being an industry veteran, whether it's retail, MSME, agri, or even NBFCs, where are you seeing lower amount of stress right now compared to, say, about 6 months ago?
I think we are seeing, I mean, one of the things we have tried to do in this analyst presentation is try to give you as much of data as possible to give you a sense on the overall quality of the portfolio. This time we have taken a stab at the MSME portfolio and given a fair amount of detail as with respect to the rating and the external information, external data with respect to the scores. Now, all of the data shows that the quality of the portfolio, the incremental portfolio that is being originated, is of a good quality. It also shows a continuous increment in the overall quality of the portfolio. So the progress, if I may say so, is all around, and we do still have some challenges with respect to the NCLT issues getting closed out, some of the telecom exposures being brought to a logical end. So some issues remain, but by and large, I think the quality of the portfolio has been showing improvement because of new origination quality has been high, and the basic machinery with respect to collection and other things have also substantially improved.
Okay, we have a couple of more questions on capital and issues after the merger happens. Do stay with us. We have to take a mandatory break. Back in a jiffy, Mr. Jayakumar. Welcome back. We have been speaking with Mr. P.S. Jayakumar, the Managing Director and CEO of Bank of Baroda. The bank's numbers, its loan growth, its improvement in margins have been greeted with a 3% uptick in the stock today as well. It got that uptick yesterday. Mr. Jayakumar, I wanted to ask you, what details can you give us about the post-merger scenario? Are we going to see an increase in cost to income initially, or bang in the first quarter itself you can see some rationalization and the cost to income at the moment, which has risen, is the highest?
I would put it this way, that in general the experience is that the revenue side synergies generally are much more easier to accomplish than the cost side synergy. For example, if you look at reducing the number of data center from 6 to 2, it would take a time, maybe a year, before the entire migration exercise gets in. the cost to income ratio to my mind can be balanced by a more buoyant revenue, and because of bringing in more products across the table. It could also happen because of improved collection practices, etc. So what we would try to do is to look at the cost to income ratio, but I would be hesitant to say it would improve, also because there would be some front-ended expenses with respect to integration exercises which would also start off. But if we are able to keep the revenue momentum up, then to a large extent the ratios can be kept within control. But in general, I would say that the revenue side synergies is what would help us to get the cost to income ratio stable, but in the initial stage, and the expense synergies would take time to realize.
Okay. And then the CET, sir, that's declined to 8.7% even after the merger, while capital has been promised for Dena Bank. Can you give us an idea what the CET1 will be on the day of the merger, and therefore how quickly you will have to raise funds? Do you already have fundraising plans?
We have there would be some amount of accretion coming on account of the fact that the profits for the year would move into the balance sheet. That I expect from a Bank of Baroda perspective to be about 30 to 35 basis points. I think Vijaya Bank would also have some similar kind of benefit as the profit gets pulled in. I think that would be one outcome. Second, all the three banks have gone for an employee stock purchase plan, so something would come out of that. We're also expecting a certain amount of investment, government providing capital to us prior to the merger or very close immediately after the merger. So all in all, I think we would have enough firepower to make progress in the first 2-3 quarters, and then once the business stabilizes and we can show the merger is working out well, I think we can go to the market and raise funds. I expect the stock to get re-rated, maybe in 3 quarters after merger, and I'm fairly confident that we'd be able to pull this whole thing through. There are so much of advantages that we would get through this amalgamation process. There are many benefits we see in form of distribution, product, etc. And so I think we would also like to see the stock re-rated. I think there is a good reason for that to happen.
So, sir, in terms of a timeline, would you be looking at the first half of calendar year 2019 for fundraising?
Some of it would have, yes, I would think so, but I think the timing of some of it is also going to be decided by the government, and when they go, and their plan with respect to infusion of capital. Some amount of money was set aside by them for Dena Bank in any case. So I hope that's what the government has always been on record, that they would support the combined institution with adequate amount of capital infusion. But assuming it does not happen, and we should make that assumptions as well, I think we have, at least for the first 2-3 quarters, I would have adequate capital to continue with the momentum, and by the time we should get prepared for raising money from the market.
All right, we look forward to that, Mr. Jayakumar. Thank you very much for spending time with us and giving us some glimpse of the post-amalgamated Bank of Baroda. All the very best to you. Quick break now, and Manisha Gupta is joining us with the first commodity trends.